All right, welcome back to the Roadmap to Retirement podcast.
This is Roadmap to Retirement. Tune in for financial tips, investment strategies, and smart money moves to supercharge your retirement savings. Alex Neri, CFP, and guests are here to help you build your roadmap to retirement.
Jason Grover making your third appearance on the show. The people love you, so we bring you back.
Thank you.
How are you today?
I'm doing well. Yourself?
I'm great.
Yeah.
So I thought we'd dive into a topic that I've been getting a lot of, and that's just questions around geopolitical conflicts, which is the professional way to say wars.
Okay.
So obviously right now we have this conflict going on in Iran, so we get a lot of clients that are asking fearfully, coming from a place of fear, how is this affecting their portfolio? How is this affecting their long-term plans?
Yep.
And I'm hesitant to talk about any current events on the podcast because I want this to age well, right?
Yeah.
We want to have our listeners go back and listen to this in 10 years and have the thing that we said still hold true. But I think luckily with this topic, it probably will age well. And our advice today to our clients is probably the same as it will be for the next conflict and the conflict after that.
Yeah.
So I think we're similar.
Geopolitical conflicts are not going away.
They're not going away.
Yeah.
We will never really have sustained world peace, probably.
Unfortunately.
So I think you have the same opinion as me, but I'm going to let you say it.
Okay.
So what is your advice to a client today? They come to you and say, Jason, I'm really scared. I was watching my cable news network of choice, and I saw that the stock market's down. I saw that this time is different. This is World War III. I need to take all my money, put it under the mattress. I need to sell it all, buy gold, whatever the thing is. How do you respond to that person today?
That's pretty dramatic.
So you tell them to take a deep breath.
Take a deep breath.
Okay.
Yeah. What has changed in your life? It would be the question that I have always for them. How have your goals changed? Do we have any control over what this event is, whatever political event, conflict, etc.? Because this time isn't different. We are still invested in great companies of the world. And if your goals haven't changed, then why are we changing the plan? And that would really be my response 100% of the time with my clients is what's going on in your life? Why do we need to make adjustments in your portfolio just because of something that's happening outside our control?
Sure. I think that makes rational sense.
Yes.
And you and I know that because we do this every day.
Yep.
I think a lot of times when we're talking to the client, that they're people that do something different, right? They're not focused on this every day. They just get the statement in the mail, they check online, and they have that gut sinking feeling of, oh no, I just lost X amount of dollars.
Okay.
Yep. Everybody's portfolio is different. And
Yep.
no matter how much money you have, all the money you have is all the money that you do have.
Yep.
So it still hits the same.
Yeah. So I remind them of whatever planning we've done in normal times, quote unquote normal times. So if we have somebody that's still accumulating assets, I'd be like, woohoo, the markets are down.
Everything's on sale.
Now we're buying bucket loads of shares of great companies instead of thimble amounts of shares of great companies. So let's reframe what we're looking at here. Let's take a look at your last statement. You only bought 100 shares of XYZ. This month, you're going to buy 150 shares of these wonderful companies. So if you're accumulating assets and we have markets that are volatile, this is the time that we don't stop investing. We actually can increase investing would be my recommendation. Let's take advantage of this conflict. Let's take advantage because the downturn is always temporary. The incline is permanent. We own great companies that provide goods and services for a profit. And we're always going to own these great companies regardless of what's going on in the world. If you're taking income, we've already planned for this. And this, whatever this event is, whatever headline of the day. And what I mean by that is that I have 2 to 5 years of income set aside for my clients so that they do not have to change their portfolio based on things that are out of their control. I will still be able to provide them the income every single month, quarter, year, for a minimum of 2 years and up to 5 years, depending on what we decided as a plan. So statistically, historically speaking, we have covered almost every event since World War II.
Pretty good.
Yeah.
It's a good stretch of history.
Yeah, it is.
I think that's the client review meetings right now. That's the most powerful tools when they're nervous about the market. I pull it up on the screen, I zoom in, and I say, this is your breakdown. We have, yes, X amount of dollars in equities.
Yep.
Yes, there's volatility there. Yes, that's scary, but look over here next to it. And we've got money that can be our war chest. That is, we know that this money is there for you to spend. And if we have 5 years of spending there, conservatively, most clients feel pretty good about that. It's Mr. and Mrs. Client, are you going to spend more than $300,000 in the next 5 years?
Yep. And
for most middle-class retirees, they go, oh, no, I could never spend that much.
Yep.
Great. Then we have nothing to worry about for at least 5 years. Do you feel confident that the economy and the markets, whatever it is, could they recover in the next 5 years? Like, oh, yeah, I don't think this will last this long.
Yep.
If they're rational. Some people.
Let's talk about irrational thoughts, because that's exactly what happens for 90% of the people that we talk to is they look at the plan, they understand that, okay, next year, if these headlines haven't changed in a year, you still have another year to 4 years of income protection. So let's have this conversation again next year. Know now that your lifestyle does not have to change. And people usually feel good. I find that most people just want to hear confidence in us. They want to see that we're not panicking. And there's been times that I've sat on my couch or in my office and I'm a human too, right? And what's going on? Am I doing the right things for my portfolio? And having a disciplined approach, having a philosophy that has gone through. And I was licensed in 2007, so it started right away for me. And I have the experience to go through this, that yes, it's as long as we have this protection, we're good to go. When it comes to irrational people, this is their livelihoods. And I find that that's most anxiety happens 5 years before and 5 years after retirement, because they're about to retire or they just became retired.
Now it matters. It didn't matter when they were 35.
Correct.
Now that they're retired, it's real money that they're looking to spend soon or now.
And somebody that's been retired for 7 to 10 years, they've been through a couple of recessions already, so they're not as panicked as somebody that's just retired. And so I find that just walking them through the plans, going through every step of the process, really talking to them about their goals and what they're spending money on. Now, there have been times that I haven't been able to talk people off the ledge, but I try to come to some kind of an agreement of how we are either going to pull the money out or put the money in. So if they're like, get me out of the markets, I can't sleep anymore, I know everything you're saying is rational, just get me out. I go, okay, how are we getting back in? And so I recommend some strategy, a dollar cost average. If the market goes down a little more, or goes up more, I just want them to commit to coming back into the markets or pulling out systematically, not just taking an all or nothing approach, because sometimes you just can't work past the emotions. I find, though, that once we work past the emotions for 90, once we just talk about it, those emotions subside. Yeah. But I ask for commitment to some kind of plan, and sometimes that plan, I'm making it up on the spot because I'm really trying to
help.
I'm trying to help.
Yeah. You reminded me of a strategy. I don't do this myself. Maybe I should. Maybe after this call, after this podcast, I'll start doing this. But I've heard other advisors talk about, rather than waiting until there's a crisis and having them commit to a plan to getting back in, what if in our annual review meeting every year, we're saying, Mr. and Mrs. Client, if the market were to decline by 10%, how do you think that should be handled? And have them, when they're in their rational mind, when there's not a crisis, commit to telling you, the advisor, that I understand there's volatility. If the market goes down by 10%, I'm not going to panic. I'm not going to change anything. And you could get that right and have them sign it's not a real legal document,
investment policy statement.
Investment policy. Just have them, when they're in their right frame of mind, commit to understanding the volatility, understanding that we are set up intentionally to take advantage of the market the way that it is. And then maybe if you drag that out 6 months later, when there is a crisis going on, it'll reframe in their own mind and they'll feel more committed to the plan that you as an advisor have set up.
I've contemplated using investment policy statements as well and having that in writing, but depending on which channel they watch, they either love or hate our current president or our former president or our future president. And it's their fault. It's the political parties in play. And so now this time is different again. So when I committed to that, it wasn't the end of the world. Now it's the end of the world because of this policy or administration or something like that. So there's always, so I'm hesitant because they'll just throw it away. It means nothing to them at that time. But I think, to your point, it can be used as a tool in that regard.
Yeah, I'm just thinking it's a way to challenge them to make a decision when they're not emotional.
Yeah. No,
I don't do it myself.
I'm with you. Yeah, I'm with you. That's really what it comes down to, is having that conversation, being confident in your approach, being confident in the plans that we set in place. So let's act on our plan, not react to markets, political conflicts, emotions, talking heads on TV.
Yeah. You brought up a few minutes ago the idea of, I forgot how you phrased it or what you said, but my example for this is during COVID, we had this big market pull down. And I noticed a trend among my clients where the older clients had been through 2008 and the tech bubble and all this different stuff.
Yep.
Were very calm, even though they were the ones that were either retired or very close to retirement. I didn't get a lot of calls from 60-something-year-olds panicking because of the COVID market crash or whatever you want to call it. But the 30, 35-year-old client that I have that knows they're not touching that money for another 30 years, those are the panic calls I got during that, which I thought was very odd because they're not touching the money for so long. But it goes back to what you said, and it's just they haven't been battle tested. They haven't been through this before. So for them, it's the first time the world has ended. For the 65-year-old, the world's ended 100 times already.
Correct.
So it's been interesting. I feel it a little bit myself. I've been in this business long enough to have been through some things. I understand it way more than the average investor does. But I pull up on my app on my phone, my own investment accounts, which are just like yours are, invested exactly the same as my clients are. So I feel that drawdown, and I still have that gut reaction of, oh shit, my money's less. That's not good.
We can swear on this podcast?
I don't know. She'll edit that out. Oh, poof,
sorry.
My money's gone.
I'm sorry.
But the emotional drawback is something that I can understand in my clients, and it's just trying to bring the rational brain back.
Our job is to the best of our ability, remove that emotion from decision making. I think that is what our clients really pay us for. The investment management, the financial plans, all the stuff that you and I geek out about, that I almost feel like we give away for free, because really what people hire us for is that advice and guidance through very emotional times, either fear or euphoria. Because during the AI bubble, we may still be in it. I had a lot of people like, is this something that we need to get out of? And then I have younger clients going, why am I invested in Procter & Gamble? They're not doing anything in the AI world. And I'm like, because we need to be diversified, et cetera. I can go into that whole spiel. But having a disciplined approach, making sure we don't act on fear or euphoria, greed, and making sure that we stick to that plan, that's what we get paid to do.
Sure. Yeah, you get paid for the hard conversations.
The behavioral management. I'm a behavioral manager more than an investment manager. And I'm very proud to say that. I wear that cape.
I'm proud of you.
Yeah, thank you.
All right. We're getting towards the end of our time here.
Okay.
Anything else we want to make sure we cover today?
This time isn't different.
This time isn't different.
Yeah, it's the headlines are different, but we're going to get through this. Again, I don't know what it's going to look like at the end, but I do know that being an owner of the great companies of the world is the one tried and true thing to get us towards our goals, whatever that goal may be.
Sure. I've always liked to say, is this time different? Sometimes clients say yes. And I say, well, next time be different too. And they'll say yes or no, doesn't matter. But I've got them to admit there will be a next time.
Right.
So that's something to think about.
Yeah, it's very true. There will be a next time. Yeah,
there will be a next time.
I don't do the apocalypse here.
All right.
Yeah.
Very good. We will cut it off there. Jason, thank you for being here.
It's my pleasure. Thank you for the conversation.
All right. There we go. We did it.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA and SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Individual tax or legal matters should be discussed with your tax or legal professional. Jason Grover, AIF, is not affiliated with or endorsed by Cultivate Financial Planning.